The Banking Scene Director's Cut goes behind the scenes, sharing stories and insights to help you build the bank of tomorrow.
Hey Wasim, welcome to the Banking Scene Director's Cut. Thank you for coming on the show. And before we kick off, please can you give the audience some context as to who you are and therefore why they should bother listening to you for the next half an hour or so that we'll be chatting?
Hey, Andrew, it's a pleasure to be here, and thanks for the invitation. So my name's Wasim Mushtaq. I'm the founder of 1CG. It's my own a company, kind of delivery partner to financial services. I'm 20 plus years in financial services. I started in Glasgow, in Abbey, which is now Santander, in business banking. I moved to RBS, where I was leading a lot of the corporate and commercial lending for about 3 years. Then moved to Barclays. I was their head of credit operations, across the global function. I then kind of moved into change and transformation. So I led a lot of global transformation, SRP. We did launching a lot of new products, systems. And I was there for a solid 8 years, so I was facing a lot off to the regulator. 8 year stint, so it was quite a lot. It was large facing programs that were facing off to the exco. So I got a lot of experience dealing with the regulator, and I had a lot of fun there. I managed to lead banking 2019. I went to join an SME fintech lender. We were on the coalface for Siebels, which was very interesting, and it was quite intense. Exited that within 2 years. I rejoined banking as a transformation lead in Standard Chartered. I was running their global transformation in financial markets. I was facing off to all 45 regulated entities. So very interesting. And my last role before I decided to go on myself in a portfolio career, I was a chief operating officer for CFIT, which is the Centre for Finance Innovation and Technology. For those who are familiar with the UK Khalifa review of UK fintech, it was the key recommendation on the back of it. So I reported into Charlotte Crosswell and then Azizi Britton, and I was the founding CEO. So I was there to set it up, to launch it, to hire most of the individuals, build the infrastructure organization, and also lead the Open Finance Coalition of its time. We brought in 65 plus organizations to essentially create a blueprint, a technical specification, how to move forward open finance in the UK. We worked with a lot of the banks, and then that pivoted to an open finance task force. We worked with the economic sector of the Treasury and Number 11. Well, I think we also influenced some elements of what was the Smart Data Bill, which then turned into the Data Use and Access Bill. So you don't need to listen to me, but I feel like I've got interesting kind of dynamic when it comes to fintech and banking, operations, transformation, industry bodies, regulators, and I've seen a lot behind the scenes as well. And there might be some nuggets of information that are useful to your audience.
Well, I certainly think that there's a lot of nuggets of information. And the thing that prompted this today's session was you took rather an ambitious rather successful attempt at distilling your 20 plus years of experience in financial services, or at least in innovation in financial services. You distilled it down to a single paper of about 20 pages called The Innovation Paradox in Banking.
Yes.
And I found myself nodding a lot when I was reading your paper, going, yeah, I recognize that. I recognize the
Okay.
behavior. And I thought, it would be great to have you on the show to be able to dig a little bit deeper into it. So,
I appreciate that.
if you had to explain the innovation paradox in banking, not the paper, but the actual innovation paradox in banking, in one sentence to a skeptical bank CEO, how would you frame it?
I would frame it as banks, I believe, know they need to innovate, but operate in structures that are engineered to prevent it.
Engineered to prevent innovation. That's
I firmly believe that.
That's quite quite provocative, and I think a lot of people will agree with that as well. So how do you convince them? What sort of argument normally lands with them first? The risk argument, the revenue argument, or the you'll be left behind argument? Because they've got to get their backside in gear and start innovating, or they know they've got to innovate. So how do you motivate them? What
So
normally
I think the innovation paradox or the innovation spectrum, for me, it kind of goes back to the expectation that as an industry, you need to evolve and you need to get smarter and faster. And there's a misconception to, well, what is innovation? Like, what is transformation? What is product development and all that kind of stuff. The reality is, I believe that banks, since the very beginning of time to even now, haven't really changed much in their tri-party financial framework. Okay, they make money by keeping your money. They make money by giving you money, and they make money through products or moving money, transactions, right? Margins. And everything is a derivative of that. Nothing's really changed. It's just that we had closed banking, as in no internet. Then we had internet banking. Then we had mobile banking. And now we're trying to get into this like smart data ecosystem of banking. So banking, as you can see, has moved with the times in terms of technology when technology has passed a certain threshold,
will.
and then it's become expected for clients. So reality is that banks, in some ways, their bare minimum needs to be they have to keep with the times in terms of society, of technology and advancements. Otherwise, they do get left behind. You can see it now with these neobanks in the UK or even globally, like New Bank, Revolut, Monzo, all the CMA9, all of them just thought they were like FX money, cross-border transaction companies or what have you. But now the valuations are getting very serious. And if you speak to I'm not going to give away my age, but if you speak to like my nieces, they don't really bank with the main banks. They bank with these smaller banks, and so it's become like a generational thing. So like, and eventually they will have the money in that generation. So um, I go back to, if you don't invest in this, you will be playing catch up, and it gets to a certain point that you've made too many wrong decisions or too many procrastination, that the ripple effect is you're just not going to catch up.
But um, you mentioned Monzo there, and I'm a early user of Monzo. I've got a low three-digit number. It's like 132 user number. Very coveted because I'm all the way back to alpha user. But Monzo is now over 10 years old. And yeah, Monzo's great. I love Monzo. But it's not really any different from any of the other banks. Not anymore, it's not. They're offering the same products, as you say. They're offering the same services. All they need to do now is start offering mortgages, and then they'll look like just every single other bank. So you're quite right in terms of banking itself hasn't changed much, but the banks need to keep up with the technological aspect of delivery, the efficiencies, the service enablers, and that kind of thing, that new technology will give them. And maybe we'll go down a rabbit hole of
Yeah,
AI.
but and that example of Monzo though, just, and it's for every company really. It goes through, I would say, like a maturity phase, right? And it's got to the stage now that it's maturing into other products and other kind of segments, and it evolves into the standardized products that make sense, right? So and I think what will happen is there'll be another wave of companies that come out and think, well, we can do that better now, because and this is the thing that I talk about. The structures in banks are engineered to prevent innovation. Eventually you'll get to the point that Revolut and Monzo or any other bank like that are going to struggle, because they're set up in such a way, the bigger you get, the harder it is to move.
So when we're talking about innovation and trying to innovate within a bank, one of the arguments that you put forward is that governance models in the banks often kill ideas before they've been properly understood. So what's one specific change to banking governance that would immediately make the innovation process less painful for the innovators that
Yeah.
work within banks?
I mean, I've felt this a lot during being like an accountable executive on various programs or delivering it on behalf of the accountable executive. So you need to remember banks function well because they they manage risk.
Hmm.
And every bank has this function called NAPA or NPA, which is like a new product approval process, which controls the speed of change within the bank and to make sure that everyone in the bank, as in the governance layers, ticks it and approves it that we are okay to accept this new thing coming in. So, and that model's existed from the very beginning. But the one specific change I would say is that you need to shift governance from prediction to validation and replace gated business cases with controlled experiments, um, and require evidence instead of just forecasts. The problem is most companies, and it's not just banks, most companies are run by MBAs, people that look at ROI, look at the business case, they look at the 2 3 year turnaround, and the reality is that that's where a lot of the innovation gets killed because you can't accurately predict the ROI. And I'll be honest with you, every business case I've seen for every program I've done, the actual prediction was wrong because
Yeah.
it's planning fallacy. I mean, it is what, so like, it's like this exercise that everyone knows they have to do. And everyone knows that it's rubbish. It's nonsense, but it's good enough to tick the boxes at the time. So then the business manager says, yeah, I'm okay to assign this part of the investment budget on this rather than that. And that's the game we play.
I, yes. Couldn't agree with that one more. Uh, so what's the alternative?
Ah, very good question. So banks don't need lighter governance. They need smarter governance that buys into kind of learning, buys into new experiments, proofs of concept, and also buys into, I would say, less ego. Because I feel that we're all victims of ego, whether you believe it or not, and it creates a resistance to innovation.
And you're actually very direct about ego being a root cause of failed innovation in your paper that you wrote. So if there's a senior leader listening to this and wondering, am I the problem? Because let's be honest, most of those with a massive ego wouldn't think that they're the problem in the first place. But what are the warning signs that they should be looking for in their own behavior? What does ego look like in an idea evaluation meeting?
Yeah, I mean, I've seen this on the other side, various sides of the spectrum. So I think I can spot it when it's happening. I can even spot it if I'm like a proponent of it. So people debate ownership rather than outcomes.
Hmm.
I've seen that definitely a situation. Stakeholders start to defend their turf rather than opening up and understanding the positive impacts of change and transformation or anything from that perspective. Um, and also, like I see senior leaders shut down ideas with vague objections rather than asking inquisitive questions to understand more. So they hide behind this risk management or control or governance as this kind of a veil that can't be touched or can't be kind of inquired about. So warning signs for me: um, you talk more rather than you ask. I think that's something I've noticed. You reward protectors rather than the builders, and you demand some type of certainty or security in a domain that is inherently uncertain. So you're trying to force, like a round peg into a triangle. Like it doesn't work, and you're not speaking the language of someone that's trying to build and evolve. You're speaking the language of someone's trying to protect. The problem is you can't protect forever, because eventually then someone just goes around the side.
I actually, you're familiar with my Monsters and Myths cards,
Love it, yeah.
my Monsters and Myths game, and corporate
I'm familiar with this
antibody.
too. Nice plug.
The corporate antibodies is one of my
Yeah,
monsters that came out of early workshops. People who believe that it's their role to protect the organization from change. So their first instinct is to stop it all from happening. But I want to get onto something that you came across very passionate about, and that is operational excellence.
mm,
And you pointed out that operational excellence is mainly seen as a cost reduction exercise. But you believe that, it can drive new revenue streams, etc. In the competitive market that we've got, where, as we've just said, all of the legacy banks and most of the new banks and the fintechs and all that all end up providing the same thing. So how could a bank differentiate itself and drive new revenue streams solely through achieving operational
yeah.
excellence as opposed to launching a new product?
It's a very good question, and it's something I actually firmly believe in. So, I mean, as you know, if you look at my career history, I've ran and been accountable for many operational teams that had a global kind of a responsibility. So, and it was quite clear to me. I could see like the narrative that every year you would have 5% less budget, but you'd have
Mm.
5% more to do. So in some ways, you were forced to figure out how can we get faster, leaner, quicker, and so continuous improvement became a big kind of theme in the teams and operations in general, globally across and regionally across banks. So, however, OPEX, operational excellence, is not a cost-cutting exercise. It's actually a capability building exercise. And when you can build more capability within the teams, or if you can learn how to do something faster and cheaper, you create capacity, and you create capacity which then can be transferred into investing or building and learning. And I'll give you a very clear example. I did it many times in my operational teams. Let's say you had a team of 10 people that that was aligned to do 100% of the work. Through operational excellence, you were able to whittle that down to 8 people that could do 100% of the work with the same SLAs. The other 20% or 2 people you could allocate then to find out how to be what other products can we do to not only to improve SLAs, but to provide other services, to be
Hmm.
more valuable, to look at the transaction cycle across the bank, to provide maybe a white glove service to like the top 5% of the value, or clients, and then actually somehow innovate existing procedures to something else. And we did that many times, and then we kind of created like a blueprint, and then other operational teams kind of looked at it and then kind of tried to copy certain aspects. So we did this, and we tried to create like um, project managers within certain operations for certain clients. And we became like not like a center of excellence, but we kind of became known as someone that could get the basics done, but also go above and beyond. So our team was always called in to do specific projects, specific
Okay.
programs that needed some expertise, and we had because we had capacity to do extra, the teams became more valuable within the organizations. And then naturally, if you're the team or the person to be asked to do extra something, learn something new or do something new, you automatically become more innovative because you're on the frontier of that company exploring new things. So creating capability is very important, especially in a situation where you're actually creating capability internally, but asking for a handout. And that is a mindset shift. And once you build that mindset within the teams and the teams, you're very hard to catch. And that builds culture.
So, talking about mindset set shift, um, you place a lot of emphasis on middle management being
Yeah.
ignored or overloaded. And I've got a different view of middle management. Again, another card, the frozen middle. Um, in my experience as a troublemaker, the middle management very often are this layer of people who are just looking at their next promotion. They don't want to rock the boat. So it's not so much that they're ignored, they are willfully suppressing innovation or innovative ideas or change and transformation because all they want to do is take that next step up. And so they become a blocker. But you believe differently about middle management. So what do you think are the most common unspoken fears that middle managers have about innovation and transformation?
Yeah, I mean, I'm not against middle management, first of all, I think they're so important when it comes to any organization. The reality is that most middle management originally were like the analysts
Yep.
or,
They were the coalface.
the junior, right? And they were on the coalface, speak to the clients or the stakeholders, and then some of them, got promoted, and then they worked into that situation where they had to face off to not only senior managers, but then to manage the work underneath. And the reality is that they are obviously working up and trying to manage upward, but they have to manage also the noise in the situation that the senior managers might not see or might not want to hear about. Like they're expected just to get on with it and manage all the situations. However, because we're in a constant flux of change and transformation, middle management is stretch sideways, stretch up and down, and they're a mile wide. And the problem is they create a hesitancy because they're so far stretched that what they probably see the majority of their time is a lack of delivery, a lack of resources, a lack of competency, and they are like usually the people to blame. Like, well, why is it not working? Um, you know, we've given you this, we've given you that. What's wrong? Why aren't the KPIs being met? Why aren't the SLAs being met? And most of them are probably kind of fed up as well. So my view in this is that it's not like a loss of relevance or exposure of incompetence. It's just like workload spikes that have really they start to drag their heels a little bit. And if you don't bring the hearts and minds to a new initiative for middle management, eventually just I think it gets stuck in the mud somewhere. The incentives needs to be stop rewarding just stability and process compliance and BAU protection, but start rewarding kind of problem solving, problem resolution, cross-functional kind of delivery, and evidence of simplification. I'm a big believer of kind of first principles kind of thinking. I think it forces you to answer the direct questions. But I do not believe middle managers block innovation. I think the systems that they've inherited do, and the incentives and the fear. And middle management should be challenging the systems more to then create a culture and a system, not a system, an environment that incentivizes evolution rather than just keeping everything the same. Because, if you keep everything the same, eventually the world catches up with you, and that's the problem.
Yeah, it overtakes you. And on the topic of KPIs, incentives, and that kind of thing, another big warning of yours, one of your big mistakes that you call out is silos. And I think anybody who's ever worked in financial services and probably a lot of big organizations outside of financial services are very familiar with the siloed approach, mainly driven through KPIs that are specific to certain areas, to certain competencies, departments, that kind of a thing. So collaboration is a big thing that you talk about a lot, and you've just been speaking about the middle managers. So what sort of KPIs need to be created, or what sort of structural changes need to be created to help break down those silos and get things moving in a collaborative manner?
Yeah, so I mean,
Do KPIs work in practice?
they work in practice to get the teams and departments up to a certain standard. So I think it was the so I mean, as I was working up management, and you were going through your yearly plans and priorities, and you look at the KPIs and the SLAs. Key performance indicators are good to clarify your responsibilities, and they're good to kind of create like a floor of what you're trying to do. The problem is then everyone just believes the floor is good enough. And you get into that, well, what have you got to complain about? We're hitting our KPIs. What have you got complained about hitting our SLAs? So it became like this kind of a protection layer. And the problem is, it's very siloed in that you're not, it's departmental KPIs, it's team KPIs. So inherently KPIs are created in a vertical stream, but they're not created in terms of journeys or outcomes or transaction cycles. So what you really actually need is to find a way to create unified KPIs across an outcome. For example, onboarding. Um, in a bank, onboarding is a solution provided to ensure that the customers that you're bringing in, your KYC or your KYB, your AML, and everything fine, and that's fine. But then you may have various KPIs for onboarding depending on the department, depending on the type of client, depending on the data you have to look at it. But if you step back for a second and say, hold on a minute, onboarding is a solution that we provide to the bank and support customers. Let's step back and think what would be the unified KPI to do this across all the segments at a helicopter view. And then think about what are the most critical things to focus on. That for me means that you're forcing various departments to work together and look at a problem solution holistically as a service to the company rather than a solution. Because I think people need to get um, out of the mindset of just providing um, like a specific element to like a specific cog in the engine, and start looking at the engine holistically, and forcing teams cross-functional to think about the bigger picture, I think is a much cleaner way to look at KPIs. I think KPIs and SLAs probably need to be reinvented into something else. I think you've probably given me something to think about actually, when it comes to that. 'Cause I don't know the answer. But inherently, if you think about it, they are created in such a way to look inwards
Yes.
and
Yeah.
outward.
No, so you've got a great little diagram. Sorry, that wasn't meant to be dismissive. You have a great diagram in your paper that you call the collaboration flywheel.
Oh, yes, yes.
Line, focus, commit, accept, apply, assess, reflect. And it's deliberately simple to make it understandable. So what I want to know is, in your experience, where do banks most often stall on that flywheel?
That's a really good question. I thought about this as I was kind of creating it. I had some conflicting opinions, but then what I've settled on is commit is actually the most difficult stage because people can claim alignment, but not actually align in behavior or intent. Commit also exposes who genuinely supports delivery, and who hides behind kind of policy process, reasons not to act, vis-a-vis risk management. When commitment is tested, um, stakeholders often give like 1,000 reasons why something cannot be done,
Mhm.
and very rarely do they give suggestions on how it can be done. And it's the ones that start to discuss, negotiate, figure out ways to resolve or overcome challenges. That's the one that you realize that they are going to commit. And also, commit forces essentially, I would say, like a realization of who will help versus who will obstruct. Lack of resourcing, delays, excuses, passive resistance all surface at this point.
So
Commit.
I was just going to ask, just to remind us, in your flywheel, commit is all about actually giving up the resources to get this thing done. Whereas in the align phase is all about people nodding in agreement. And they might say, oh, yes, we're on board. You actually even made a comment saying, if teams are not on board, they'll go nowhere. And I've seen it so often in alignment meetings where you go around the table and they say, yeah, we're on board with this. And then a month or two later, the project manager comes in and goes, can't get any resources out of that team, or the BAU team say they're too busy to do user acceptance testing, and
Yeah.
that's what you mean by commit, isn't it?
Yeah, it is, because you're right. Alignment, all you need to do is nod your heads, and really that's it. It's not tested. And even if you say you're going to commit to what and to what level, and to how much. And then sometimes, yeah, we'll give people, and then they just give arms and legs, and you can't really do much with like 10 minutes here or 20 minutes here, or like, So commit for me is where momentum dies in most banks, because people avoid ownership. Ownership and accountability, I feel, is where a lot of people just don't want to support any innovation or change initiative. They just leave it with the accountable executive to own, or the project manager. But as you know, they're just the facilitators. They can't make it happen. It needs to be the people doing the work needs to make it happen. However, I know you asked me for one, which I've given commit. I'm going to be cheeky though and give you another one, if that's all right. The reason being is because I think this is crucial as well. And the second most difficult one is repeat. And you might think, well, why is repeat so difficult? It should be fine. It's because repeat requires teams to go through maybe a painful exercise and cycle again. Analysis, decisions, delivery, testing, iteration. Many stakeholders resist repeating because they believe doing something once is enough. Oh, we did that. I did my bit. Now let's move on to something else. Because people want shiny new initiatives, not repetition. It's not sexy. It doesn't, ring the it doesn't tick the boxes of doing something again and again. Doing multiple things feels more valuable, but it's not. So, and you need repetition to embed change. Repeat forces teams to confront, I would say, the person in the mirror. Are we willing to do this properly again? Most don't want to do it, which is why progress stalls. Now, there's an interesting tweak in this dilemma. Most senior leaders, and I mean at the top end, they go through a change cycle every 3 to 5 years. The people at the top get replaced, or people that are accountable for a specific global function change. And guess what happens? When new people come in, they want to change what they've inherited because they believe transforming, changing something is how they make a lasting impact. So you can enable repeat because new leaders want to leave their mark, but it creates a rerun cycle. They have to accept and understand what happened previously before they arrived and what needs to happen now. I actually think regulation compliance is a great force repeat because you need to be regulatory compliant and you need to adhere to certain regulations. So I always like to use that as a key unlock, because if you're doing this much initiatives and change, why not do this as well? And it'll help you. So yeah, repeat, essential to keep the loop going. So for me, repeat, commit, repeat, commit. The kind of, I think they're quite opposite ends of the flywheel as well. So if you can nail those two, then usually you've got enough momentum to get to the next stage and the next stage. Hopefully that makes sense. I've lived this and experienced it, and I think these two are the most painful ones and the most crucial.
In the interest of time, I'm not going to be asking you for what the magic wand is to get people to commit, because I still got a couple more questions to ask you.
Sure.
One of them is another diagram. I love visuals. I love visual representations of things because they get concepts across very quickly. And it was the first time that I had seen an innovation radar presented the way that you've done innovation radar. I do innovation radars, but they look very different like that. It's from a futuristic perspective in terms of, now, next, never, that kind of a thing. So I was very interested looking at yours, which runs across 12 different dimensions.
Yeah.
By the way, is that a construct that you created, or is that okay? So I mean, you've got offerings, platforms, solutions, customer experience, value capture, processes, organization, supply chain, presence, networking, brand, and customer, which is a heck of a thing to plot on the innovation radar. So when you have plotted this with banks, which of those 12 dimensions are usually wildly overrated by the banks themselves, and which ones are consistently neglected? Because there's got to be some consistent patterns that are coming up when you've done this.
Yeah. So first I would say that I did not invent it. I would love to say I did. I didn't. It was created initially by some members of MIT, where I had the privilege to study. And it wasn't. It was done more holistically in terms of just industries. It wasn't specifically assigned to any one industry. But as I was reading it and looking at it, I felt like that's actually quite a good way to utilize in banking, because banks and through all of the RFPs that I've been a part of or scored, benchmarking is actually a very useful tool when it comes to in financial services, looking at decisions or products, what have you. And when it comes to the what, the who, the how, and the where, and all the other elements of it, I would say the kind of more challenging and overrated dimensions of this is technology and product. Um, Banks like to score themselves highly because it feels kind of tangible. But the reality is that they're probably lower than they expect. And
Mm-hmm.
for me, it's always interesting when I work with my clients that score them high, because it's about, do you actually understand your own company in the wider context and construct? And most of them don't, because their job is very much siloed and internally focused. And that tells you a lot about the culture of the companies. And neglected dimensions I see um, are networking, supply chain, and value capture. And I see this as even more evidence that there's a lack of understanding on the wider ecosystem
Mm-hmm.
when it comes to not only banking and financial services, but also where innovation can play a solution and a part in the outcomes that need to be kind of driven. So yeah.
So, um, if a bank discovers it's lopsided like that, right? What they say they're strong in tech and products, but weak in supply chain networking. What's the most pragmatic way to rebalance without stopping everything else? Because,
Yeah.
the resources have to be diverted. It's not like you can magic up some extra resources what do you
The
do?
whole point, the whole point of the radar is just to create an acceptance of the current reality. And
It's awareness more than anything else.
Yeah, it is. It's like an exercise I do, and I kind of use this as a way in the beginning so people accept. If
Mm-hmm.
you go back to the previous radar, because if
Yeah.
we can accept the source of truth and the reality, then that's the starting line. We've got everyone on the starting line at the same time. right? And then it's about, well, priorities. Our radar only matters if you respond to blind spots or
Hmm.
actually respond to it. Otherwise, it's just a nice exercise, tick box exercise, right? And it could be that, oh, actually, our operations is okay. Our product is okay, but we're very much inward focused and we don't have the skill set internally to create innovation. Let's go outside and collaborate and bring people in. Okay. And bring entities and companies. Fine. So you don't stop ongoing work. You have to accept that, but you need to add small dedicated teams to focus on the weak dimensions with simple measurable targets and start from there. You can't solve it in one go, but it's a journey to make that part of the radar a bit more. And that will have a compound effect. The thing is, whether it's 12 dimensions, 4 dimensions, 8 dimensions, it doesn't really matter. What matters is you're actually accepting that there's a gap and you want to get from this to that. And
Yeah.
that movement, the acceptance of growing, is actually has a compound effect on all of the other elements anyway. I see it as a force multiplier rather than just a single area. And it's just really about accepting, okay, this is a priority now. Let's focus on it. Let's allocate some resources and let's be clear on what we're trying to do in a certain time frame. I think 90 days is always a very good timeline to get something done and deliver something.
Hmm. Hmm.
I used to be in banks where we'd have a 12-month timeline to deliver something, but you chop it down into chunks anyway. Since leaving banking and working with banks or specific select teams or even fintechs, 90 days is a long time to get a lot of things done. You can get a lot done there, especially when you've got squads and they're
Hmm.
empowered and they can make decisions and they have their own design authorities and what have you. And just focus on, right, we're going to move this to there. And these are the 4 metrics we're going to use, and let's go out and do it. So, yeah, it's one of those things that I've seen. It's just great to capture the reality. And I think it's very eye opening because people are so focused on just doing. They don't get enough time to just assess what they're doing and why they're doing it and where are they going by doing this.
So, something else that I want to talk about with you, maybe a little bit contentious to some people. You suggested flipping the org chart. So frontline staff and customers become the main architects of innovation, which in theory sounds great. And there's a number of companies that have done this over time, crowdsourcing ideas from customers and things like this and having suggestion boxes, digital kinds and everything. However, it can create a lot of noise. I was working in an organization that shall remain unnamed to protect their pride, where a new CEO came in and he was frustrated with the lack of employee suggestions. So he sent an all-staff email saying, "My inbox is open. Send me your suggestions on how to improve organization X." Okay. And he was expecting these astute suggestions from the innovators and everything. And I kid you not, one of the suggestions was put 3-ply toilet paper in the ladies' toilets. Another suggestion was, can we please have more of a particular dish on the menu in our canteen? And most of the suggestions, he got over 2,500 emails back, and most of them were just noise, mainly because the actual innovators knew that if they sent the CEO an email, it would go nowhere. It really would. So have you seen this work in banks, and how have you seen them capture and act on ideas from the front line without drowning in the noise? What does that take in
That
reality?
is such an interesting example you've shared me, 2,500. Well, that's a lot. That also gives you context of people's lack of belief in the process of providing answers and solutions to existing problems. To answer your question, have I seen it work in a bank? I've seen it work in teams,
Mhm.
teams that I've managed. I've seen it work in other teams. And it's very clear for me. I would ask my team members who are dealing with stakeholders on a daily basis or end user clients, what are the biggest problems that you are seeing that is causing us to fail, and what is the biggest feedback you're hearing from customers that you think has the biggest impact on us to not deliver what we're supposed to do? And I think frontline insight is the cheapest and most accurate form of customer
Yep.
research. It's there. Yes, you can speak to your customers as well, as in, empower the voice of customer. And, I work with companies that do that, but also one layer behind that is close enough as well. I see, if you have a good connection, and then the reality is that you get those suggestions, you actually create a belief in your team members that, listen, these suggestions are going to be taken very seriously. We're going to look at them. We're going to workshop them. We're going to reverse engineer them and see what are we doing to improve that situation. So we had that in various teams, but I'll give an example. When I was running credit for Barclays Wealth and then Barclays Private Bank, and we were tasked to really improve and create a new operating model for credit in the bank, which was then going to be utilized by a new system because we were getting a new system. So we had to create the operational flows, then the product flows, then the process flows and the controls. So we kind of went back to first principles and said, right, what can we improve in every part of this process? And we ended up changing probably 50% of the process in terms of controls, in terms of pre-checks, data validation. Um, we we didn't want to double tap the customer for information that we already had before. You could see that in certain areas because that wasn't the customer's fault. That was a lack of integration of data from our side. Were we using our data correctly? Also to spot early arrears and collateral management. So the answer is yes. If you can empower your team correctly, and this is where I go back to operational excellence, continuous improvement, because
Mhm.
these are continuous improvement pieces and tweaks. Then you actually have the power to change how the team works. Yes, absolutely, you can flip the org chart and get the noise into signal. And I think that's been a big proponent and why I do that.
I think the key thing that I was looking for, you said right at the beginning, is provide the context before you ask the question.
Mm.
Because open-ended, give me your suggestions, never work. That to me always creates too much noise. But if you contextualize, we have this specific area that we are looking for suggestions on improvement, or we have this specific capability that we would like to develop. How would you shape it? Give me your top 3 customer pain points that you would like to wave a magic wand and have go away. Contextualizing the question to me is the most important thing in reducing that noise.
Yeah, on
Otherwise,
that one, I would also add, like the theory of constraints. So,
Mhm.
in that, listen, we we will love to wave the magic wand, but we can't because we can't employ 1,000 people. We have our resources and they're fixed. We have our systems currently and they're fixed, and we have the time allocated to work. We're fixed. I'm not purporting that. I'm not suggesting we work 7 days a week because I don't think that's healthy, right? So, we know what we have, and we know what we need to do. So there's a gap. What's the best way to solve that gap? And it was very clear. Listen, for example, we are expecting 10% more volume next year. So we have to find a way to create 10% more value and efficiency in what we've got. What are the biggest drivers and triggers to do that? Where are we wasting time? Where are we double checking our work? Where are we getting non-STP? You know, where are we? Are we killing efficiency? Let's focus on those quick wins first and see what are we doing wrong or what can we do better, and then figure out what else can we do above and beyond that. You know, so that there's a process to this, and very much if you contextualize it, then it helps the team focus.
Hmm. Hmm. So, last question. And thank you so much for giving so much of your time up here for this. Your last takeaway in your paper is about future-proofing the core while betting on the frontier.
Yeah.
For any bank out there today, what are 2 or 3 frontier bets you think must be on the table over the next couple of years?
Okay, so just for context, this is like the innovation radar where I create like innovation and value or price and efficiency. I can't remember what it was, but basically OPEX being like the small continuous improvement pieces, and innovation frontier being like right out there where it's high risk but really high reward. I think given everything I've seen over the last 6 to 12 months in financial services, I would say that smart data ecosystems is there, where you've got now the legislation, like the data use and access bill, where it's going to empower companies to use data efficiently to then provide wider context and solutions to customers. So in the context of financial services, open finance, which is the next wave, and creating that really read and write 360 for customers, to empower them. I think if you're not building products right now for that, you're going to really fall behind. And that is the next wave, I feel, predict. And that's a lot of the work I'm doing right now with my clients on building that right now. And then, so that's one, and that goes throughout the entire company. And I think that's an enabler for the next wave of innovation. So that's one. Number two, I would say, is agentic AI. I'm seeing a
I
lot
was
of.
hoping at least AI
I
would
tried to
milk
stay away
you.
from it, but you know, I've already seen some POCs on it. I'm working with like agentic AI with agents speaking to agents and that. But the problem with agentic AI is that it needs clear, concise, and verified data sets.
Mhm.
And if it's garbage in, it's garbage out. And it's very hard to just give a task to agentic AI to validate data that is just wrong and doesn't make sense. So this is why the previous iteration of this was like data scientists and data analysts to create a source of truth in the bank or the organization. If you haven't got that yet, you really need to focus on that ASAP, because then that's the foundation, I think, on LLMs and SLMs to then do what they need to do. And that agentic AI, whatever you're working on, for me, goes to then something else, which is autonomous risk management and decision making. I think it's going to get down to that situation. Why? Because the processing power of that and the ability to do that accurately is just going to get better and better. I like this phrase that they say AI is the worst it's ever going to be today. And the rate of improvement is quite exponential if you look at a lot of the solutions that were available 12 months ago and they're available now. I mean, video production is like a very interesting one, right? And case study. So, and I think that's how teams are going to be able to create more capacity when you can automate and have more autonomous. But this big thing about black box and decision making, which for me is like a separate podcast, and I was chairing a panel which we talked about the ethical elements of
Oh,
AI.
yes.
Um, and the
We've
question
had
was,
many debates.
yeah, and the question was, can you trust the machine? I flipped it. I said, no, can you trust the person behind the machine? Because the machine will do what it's told up to
Yep.
a certain point. So there are inherent biases there. Um, but I think that is the frontier bets. Neglected core capabilities. Still, if you can believe we're talking about it, legacy modernization, data quality, operation resilience. These are like the core fundamentals that, there are good principles that need to be followed in any company to run them effectively. And the reality is that you're not going to be able to be on the frontier if you're not running the company properly with the core,
Mhm.
right? So you just need to get all the stuff that you should be getting done management 101, business 101 done right, to then have the mindset and the mind space and capability, then focus on the frontier bits. And listen, you can't do everything by yourself. Open the ecosystem, engage with the innovators, do proofs of concepts, have experiments, work with fintechs, work with leaders, and also innovators internally to build some things. And also, like I would end on this, frontier bets fail when the core is crumbling. So if you know that you've got problems that need to be addressed and fixed, fix them first. Because it doesn't matter how shiny the wheels are or the paint job, or the lights. If the engine doesn't work and the tires are flat, like really, you're not going to go anywhere. Nobody cares then.
That is such a brilliant quote, that frontier bets fail when the core is crumbling. That is going to be, you should use that as a strapline there, Wasim.
Okay, no worries. Well, appreciate that. Thank you.
Thank you so much for all of the insights and for being so generous with your time. On that profound note, I don't think that we can improve anything else in this podcast. I will say thank you for joining us, and we look forward to speaking again soon.
Andrew, it's a pleasure. Thank you.